Once again, it is time for our monthly crypto portfolio update. This time I'm adding a truly revolutionary coin to that portfolio. It's got a big release coming up in about 20 days, and the Bitcoin ordinal NFT hype is working in its favor. Let's explore this new altcoin addition to our portfolio. Welcome to the channel. My name is Maddie and this is Altcoin Buzz. We're talking about assets, we're talking about portfolio management, but remember, I am not a financial or investment advisor. And so this video is not official financial or investment advice. All right, so in cryptocurrency, a month can make a huge difference. In fact, a month is a very long time in crypto. For a quick recap, we added Moonbeam. So now we have 10 holdings plus stable coins. But that isn't until today, because today we're using our last $500 in stable coins, which we always set aside as dry powder, as a reminder. We're going to take that $500 and add it to another position, one of our favorite layer 2s, in fact. But just to get up to speed here, let's take a look at how our portfolio did in January and February. February was actually particularly good. We almost doubled our ROI from 12.6% as of the end of January to 24.5% today. And we went from losing on 4 positions to only 2 positions. And those two smaller caps, Kujira and Fuse, they actually improved their position in the last month versus where they were in January. So the losses here are smaller than before. And so of course we're sticking with those choices. How do we do in our benchmarks of Bitcoin and Ethereum? Well, in January, this is how the returns looked. Bitcoin, 14.35%. Ethereum, 18.74%, and our overall portfolio, 12.62%. So we came back nicely from an ugly November and December, but we were still trailing the market, trailing Bitcoin and Ethereum, that is, unfortunately. But not anymore, because looking at February, Bitcoin's returns, 18.61%, Ethereum, 19.33%. By the way, notice both are higher than January, so those made money as well for us. But the portfolio is ahead of both of those. The portfolio went up 24.5%. Not bad. And what allowed us to beat the market? Effectively, the diversity play in this portfolio, because we now have 8 profitable positions. But let's start with the biggest month-to-month changes. The most massive, monstrous gain in the last month was equivalent to $600. Our position went down from negative $42 to over $500 in profit. And who did that for us? It was the graph, ticker GRT. Like all cryptos, the graph could go back to being unprofitable next month. That is possible. But I did expect this position to be profitable at some point. And for a specific reason, because we bought quality at a good price. And more than that, GRT is still the leader in its sector of organizing blockchain data. Buying leaders while they lead is pretty simple as far as the way it sounds, but it is a winning strategy. And the next biggest monthly change was Polygon. MATIC was up just under $300 for the month, and they've been on fire, and they're capturing everyone's attention with the deals and the partnerships that they're striking up. And now their zero knowledge-based EVM is coming out at the end of March. Really, they just seem to be doing everything right. And here's a look at some of our other winning positions. Lukso is up the highest in terms of percentage, up 117%. Then we have Polygon and the graph at 68% and 63% respectively. Then Bitcoin, 18.6%, and a respectable 11% for both BNB and Moonbeam. So this is our portfolio management at work, because when you diversify positions, as we have with these 10, you can increase returns and reduce risk at the same time. And we'd like to think that's what we're doing. So we're up 6% from 24.5% against 18.6% with lower risk than just holding Bitcoin alone. And our goal, of course, is to beat Bitcoin and Ethereum and have a lower risk than Bitcoin only. Now, narratives matter quite a bit in crypto. So we've got to zoom out sometimes and take a look at the trending story. Right now, one of them is layer 2 solutions. And Coinbase just announced its base layer 2. Bitcoin's layer 2 with stacks, rootstock, and ordinals has been busy, and ETH layer 2s are always active, from the Polygon ZK update to increasing transactions on most L2 solutions. So the question is, who should we pick? Well, we're happy to announce that we're going to be adding stacks to our portfolio, because we still have $500 in stablecoins, and we are using it to buy stacks. Now, we have no cash on the sidelines. We are fully invested with the allocation of that $500. And this means, of course, that we can no longer add a position without selling something. And with our current portfolio management rules in place, none of our positions right now is big enough on a percentage basis for us to take profits to sell. When they do get big enough one day, maybe then we'll choose to buy something with the profits, but not yet. Okay, so why stacks? With a few good layer 2 choices out there, it's a fair question. We're adding stacks because it's the most exciting thing to happen to Bitcoin in a while. It's already been building DeFi for Bitcoin and the Bitcoin name service .btc. But now with ordinals, NFTs are on Bitcoin and only use up 1 Satoshi of block space. By the way, we do have an upcoming video on ordinals. Stay tuned for that. It's going to be published soon. But in the meantime, stacks is much more than just the recent hype. It and Rootstock are the only 2 main operating layer 2 solutions for Bitcoin if you don't include the Lightning Network. Other than the .btc name service, just a few of the great apps on stacks include Registrar by Paradigma. So it lets you register decentralized domain names and IDs without needing to use IPFS like Ethereum does, all secured by Bitcoin. Sigle, a Web3 journaling and blogging app, so you can't be censored for what you write. USDA, this is the first USD stablecoin in the Bitcoin ecosystem, minted with stacks and secured by Bitcoin. And Zest Protocol, Bitcoin loans effectively for institutions, where DeFi and TradFi are really meeting at the crossroads in Bitcoin. And there's a lot more as well. So for all these reasons, we see stacks really as building a pretty extensive ecosystem that most of us don't know that much about yet, but which is very promising. And that's what I like about the ordinal news and hype as well. Yes, fair, it is hyped right now, that's true, but there's a new awareness for stacks and Bitcoin layer 2s in general, but it feels like an awareness that we should have had all along. So right now, in a way, we're kind of playing catch up to all these amazing things happening over on Bitcoin. So we bought $500 worth of stacks at 76 cents. So that means we have 657 STX in our portfolio now. Once again, stacks, ticker STX. Let me know what you guys think about this portfolio as well as our addition. Go back and check out our dedicated video on stacks if you've not already for more in-depth information. What are you guys hodling right now? What are you adding? What are you subtracting from your portfolio? When do you think we're going to break out of this crypto bear market that just seems to be going sideways right now? Not financial advice, as I always say, but look, if you have patience in this space, if you vet your projects thoroughly and do your own research, it's not a matter of if, it's a matter of when. So best of luck out there.